We have issued guidelines to SACCOs on how to manage complaints. We require them to make sure they are recorded, they are resolved and documented. At the end of every quarter by 15, they need to file returns with us.
Hello and welcome to our new episode of the SACCO Voice. My name is Irene Kirianki. With us today is the SASRA'S CEO, Mr. Peter Njuguna, and we'll be hearing a lot from him regarding the regulation of SACCOs in Kenya. Thank you so much for having us today, Mr. Peter Njuguna.
Most welcome.
It's such an honor and pleasure. Welcome to our show.
Thank you very much.
To start us off, maybe you can tell us in a nutshell, who is Mr. Peter Njuguna?
Thank you very much. Peter Njuguna is the CEO of SACCO Societies Regulatory Authority, SASRA, as it's generally known, which is a prudential regulator for SACCOs. I've been around SASRA for the last, this is my 15th year. Wow. I'm becoming like a fixed asset here. Now, as a person, my experience is concentrated in the financial sector. Prior to this, I was working with the World Council of Credit Unions, which is a global trade association for SACCOs. Yeah. Prior to that, I was again in the cooperative sector. I was working in Cooperative Insurance of Kenya. Prior to that, I worked in consultancy. And prior to that, I was working in the Central Bank of Kenya as a regulator. So my life has revolved around financial sector, and therefore I enjoy it because it's an engine, it's an enabler for all other economic activities. And that's what we do here at SASRA, ensuring SACCOs oil the engines of the economy. Wow,
that's amazing. It's been quite a journey. Hope you've enjoyed it.
Yeah, well, indeed, it's fun.
Oh, that's nice. So going straight into SASRA, you recently introduced a levy on cash deposit held by non-withdrawable deposit-taking SACCOs. Could you explain the rationale behind this move? And how do you see this levy improving the regulatory framework for SACCOs in Kenya? And also, maybe you can tell us the long-term benefits SACCOs and their members derive from this levy.
Thank you very much. I think the levy you are referring to is actually on member deposits that actually SACCOs collect.
Yes.
So, and the levy, it has a legal basis because it's provided in law under Section 15 as a primary source to fund the regulatory work that we are required by law to do. And essentially, the principle behind this is that the beneficiaries of a public service, public good, meet the costs of that service offered by government.
Yes.
That's really the point. It applies to other sectors, whether pensions, whether insurance. You will note premium levy, RBA levy, all those. They are meant to fund the regulatory activities so that industry is protected, is developed for the benefit of the citizenry. And that's the same principle. And therefore, coming to the benefits, why is Kenyan government regulating SACCO industry?
Yes.
SACCO industry is owned by private entities, but they are offering services that carry so much public interest and which citizens consume. And therefore, there is need to be a degree of, it therefore behoves upon the government to actually ensure that business that SACCOs do is actually conducted in a responsible manner, in a safe manner, and that is therefore why regulation becomes important, and the costs associated with this then have to be met. So one, the benefit to the members is there is a government agency mandated primarily to see that their monies are collected and used responsibly. And beyond that is to develop the industry, because as an institution, as an industry, when you are an institution, but when you grow, then you make an industry. It has certain common challenges that will be there.
Sure.
Individually, the institutions may not be able to undertake that, but government can do that. Government comes to coordinate these different players to make sure they actually deliver the promise to their members. So primarily it's about protection of member deposits and ensuring there is what you call fair treatment of the citizens who consume the services that SACCOs offer. So for me, SACCO members, I would assure them that with the government oversight, then they can sleep soundly. We are not yet there. It's a journey, but I think that's really the point.
Sure.
Yeah.
so they can be sure their money is safe and they can trust the institutions.
Absolutely.
Okay.
And that is important from a savings mobilization perspective, which is an objective of every government.
Yeah.
Because without building confidence, without building trust, then people will not save in these institutions. And there is, across the world, government have a responsibility to make sure anyone who collects money from citizens with a promise, one way or the other, is actually, regulated. Why? Because they'll collect money and apply in their own way.
Yeah.
But for us, we ensure the money is applied appropriately. Yeah.
So it's safe to say before SASRA came, people used to suffer.
I would say, the institution was small.
Yeah.
Let's say. I think the journey we have walked as a country is very interesting because we used to have very small institutions that would, at that size, to a reasonable extent, regulate themselves. But today, and that is what motivated government to actually regulate SACCOs across the world.
Okay.
I think the industry has to reach a certain level, proportional to the financial sector, proportionate to the economy, the GDP, to actually attract the interest of the government. That's why it was that administration of Kibaki, they actually realized we actually need to have oversight, appropriate oversight of the institution to actually scale their growth to another level. And that happens. That's why today we have the village banks or financial services. They are not regulated because the risk is contained among themselves.
Yeah, sure. Thank you for that. So to the next question. SACCO members sometimes feel that their complaints are not adequately addressed. How does SASRA handle complaints to ensure fairness, transparency, and the protection of interest of SACCO members, especially in cases where SACCOs face financial difficulties?
Very well. One, I think complaints fall within the realm of what you call conduct regulation. Yeah. And it happens that in Kenya, we do have the constitution envisages that consumers' interest should be protected. That's why we have even a Consumer Protection Act that seeks to do that. And over and above that, complaints, whether it's a public or private entity, is something that always arises. But in every entity, there is desire to give, to ensure there is fair treatment of customers at all times. But there will become incidences where members will need to escalate. So from where we sit as SASRA, we are bound by Ombudsman, which is Commission for Administration of Justice. We report to them on a quarterly basis on how we handle complaints. But I think specific to your question that members, their service provider is a SACCO. Yes. So the SACCO has to do their job. Yes. And realizing that, because in the regulator space we have what we call prudential supervision and the market conduct. Prudential is about the soundness of the institution. Market conduct is about the interface between the member and the institution, the SACCO. So that falls between that. How are you relating with your members? Now, due to that, we set up a department we call Market Conduct Department to look at that interface. Yes. It looks at matters fair treatment of customers, looks matters at disclosures, data protection, and even governance, some instances. And therefore, we are conscious of proactively managing that relationship. As a consequence, we have issued guidelines to SACCOs on how to manage complaints. We require them to make sure they are recorded, they are resolved, and documented. At the end of every quarter by 15, they need to file returns with us. How are they handling? And we did that after many years. We issued that guideline last year because we realized SACCOs were dealing their complaints in a very casual way, and we'll get a lot of complaints. We became at a point a customer service desk for SACCOs. Okay. And we told them, you got to do your job. Yeah. If there's any complaint, dispute between your member, you have to resolve it. And it should be reported, before they report to us on a quarterly basis, they also report monthly basis to their boards. It becomes a standing item to make sure matters are closed, because at times the complaints are as much as delayed loan, delayed refund, interest, computation questions on how you are simply handled. So it's a matter we take very dear. And arising from the guidelines we issued, we have realized that SACCOs are not able to, they have asked, okay, how do we handle some of this? So we have again right now developing a model policy to manage complaints at the SACCO level. And we'll issue it as a model so that there's a very structured approach how they resolve that, so that they are resolved at that level. However, if they come to us, then we are able to also deal with them. But remember, we cannot resolve questions without reference to the SACCO.
Sure.
So it's only delays. So we are encouraging proactive management of complaints at the institutional level.
So their uptake has been good, and it has helped the processes
Absolutely, it has really helped. I think second part of your question is, I think, is the extreme situation.
Yeah, where the financial
goes very up. If that happens, or failure of an institution, as we speak, I'll be candid on that we actually do not have a compensation mechanism like the financial sector have. And that's why we are working on operationalizing the deposit guarantee fund. The law provides deposit guarantee fund as a compensation mechanism for depositors in the event of collapse of a SACCO. It's provided in the law. Okay. We've engaged the industry, including Cusco, on the need to have it up and running. There has been certain, administrative and policy issues. And if you listen to the vetting of the CS, he actually spoke to that as one of the issues we would want to fix, like yesterday. Okay. So I think it's a priority for this government, because the amendments are already ready to address a few policy issues that will actually unlock and set the pace for operationalization of that fund, deposit guarantee fund, and ensure that in the next maybe 3 to 5 years, we have a deposit compensation mechanism for SACCOs.
Oh, that would be amazing. It will solve a lot of issues by having that fund.
Indeed. Yeah.
So are there any regulations or amendments that SASRA is considering to further strengthen the SACCO sector in Kenya in view of the rapidly changing financial landscape, especially with the rise of the digital financial services?
Very well. One, the law, as enacted today, is a living document.
Yeah.
So it is, you got to always respond to the changes in the operating environment. And that's why we've been every so often proposing amendments to the Act or regulations. Regulations basically operationalize the elements of the Act. And therefore we have a number of areas. I've already spoken to one about Deposit Guarantee Fund.
Yes.
That's a priority. So that's an amendment to the SACCO Societies Act.
Yeah.
And secondly, there is also amendments we have proposed again to facilitate what I would call greater collaboration in the industry. SACCOs being cooperatives, there's what we call the cooperation among cooperatives, the fifth principle. Yeah. But I would say from where we stand as a regulator, is the spirit of that principle has not been fully met, especially to support SACCOs to be more resilient, to be more competitive and more sustainable. I think SACCOs today are, on their own, by more, especially the critical things that matter. And therefore, there is a law, we have amendments we are proposing to what we call SACCO Shared Services Framework. Yeah. I think we want to facilitate that cooperation of SACCOs to actually address common and systemic challenges that each of them is experiencing and trying to solve in their own way, but it would be more beneficial if they came together to solve. And that's an amendment we are hoping that in the next couple of months can go through, because we've done our part. As a regulator, what we do, draft that we identify the problem, frame them appropriately, propose solutions, then we escalate them to the minister. Sure. It's one of our roles to advise the minister. Yeah. So from there they go to parliament. So those are some of them. Of course, we're also looking at, I've talked about market conduct. Is a new growing area post-global financial crisis. That's why it gained current and or rather track. And we're also looking to actually develop regulations. We've redrafted them. We would want to them published so that the market can be guided appropriately in matters market conduct. And you realize that even a while back there was a proposal by government to actually bring what you call Financial Market Conduct Authority. So that tells you it is time SACCOs actually, the legal framework aligned to that policy goal of the government.
Okay. Yeah. Cooperation amongst cooperatives.
Yes.
That's amazing. Yeah. How does SASRA strike a balance between enforcing necessary regulations and fostering an environment that encourages SACCOs to innovate and expand?
Very well. One, regulations, by themselves are meant to facilitate and promote a specific industry as such as SACCO industry by, defining minimum standards, whether operating or otherwise, of performance. And therefore, by themselves, they should facilitate innovation in a way you can be protected.
Yeah.
Okay, and therefore, the regulations define what we call minimum standards. Now, that means you have a lot of room be above the minimum to actually be creative and work. And what we do, we avail information. By law, we are required to publish the performance of the SACCO industry. Now, if you check that report, it is very rich in information, so that you know the landscape or the space within which you're operating, in terms of what are the new emerging issues, both from business and regulatory perspective. And that is meant to inform the market so they can use that information to be creative and respond to the challenges. Because innovation is about about addressing a gap or a business challenge you may be experiencing. And therefore, from where we sit, we support in a number of ways. One, avail information, industry level, so that you know what is happening. Also, we carry out studies. We've carried studies on demographics. There's this notion that the youth and the Gen Zs, as in they're called, they are not in SACCOs. And we did a demographic survey sometimes in 2019, and we are preparing to do another one this year. And actually, SACCOs have a normal curve. We have about a fifth of their members are below 35.
A fifth.
In fact, it is at 56 there, they drop off.
Okay.
And I think the idea is to make sure that we, if possible, from birth to your death, we can take care of you, that kind of a thing. So those are innovative ideas we want. We support innovation, because through that you can actually see, if they are 20% and we are told they make half of our adult population, then there is a huge market. We can do more. So the notion that youth are not in SACCOs, you find it's not true. They are there. Those who know what they are looking for. Because you have to understand, as a customer, you have first of all be self-aware of yourself financially before you go to the SACCO. So because it will meet your need. Second, we've also done a study on sectoral lending in the SACCO industry, which unpacks the different economic sectors that SACCOs lend. And that has enabled SACCO industry now to play in the mortgage space. They are crafting mortgage products for ourselves, because we have established between a quarter to a third of the credit SACCOs give is actually in land and housing. So that's how regulators now, even elements of like now shared, SACCO shared platform is an innovation. We actually, we have done studies, we see the problem SACCOs experience, we realize this problem, each of you investing money and trying to solve the problem this way or that way, but it's very costly to retain appropriate capacity. Even maintaining technology is very easy. So we would want a situation where you come together and actually share a platform, and it happens. I always cite the examples, for example, of ATMs. When they came to Kenya, it's only a few top banks that had them. Today we have ATM operators which any bank can plug to. You don't need to own ATM infrastructure. That's innovation. It is. And that is really what we're encouraging, that you don't need to own your own app necessarily. But even if you own, you can partner with a fintech to actually provide that engine and be updating. Because developing your own, if you don't have the volumes, if you have 5,000, to be very inefficient use of your capital. So we are encouraging so that a platform, say a provider of a mobile technology platform, can actually provide that service to 40 SACCOs, and where you standardize the protocols, the operating procedures you standardize, and the difference will come in the innovation the different SACCOs have. So we are very, very much pro innovation, because SACCOs in Kenya serve the household and micro and small enterprises, and that's the segment that drives the economy. And I think we also work from the perspective of let's test and see, rather than saying you must understand it.
Sure.
Now, towards that, given that regulators by their nature support innovation, there is a new concept you may have heard of, regulatory sandbox. Regulatory sandbox simply means that as a regulator, you may not understand the concept or the product that the regulators are proposing, or the innovators are proposing. So you give them space, safe space. They can actually test that. When you understand it, then you can actually regulate.
Okay.
And you actually develop the regulatory regime together with the innovators and the market.
Okay.
So that is already happening, and in our new structure, we are actually thinking of a regulatory policy department and then innovations, where you'll be provoking, encourage people to step forward to test new ideas, so that you don't wait until where they have been testing out there below the radar, you work ahead, so that that will have one benefit. When it eventually comes for scaling up for business purposes, that is commercializing the idea, the approval period is shortened.
Okay.
Yeah.
Oh, that's amazing. In that case, you're doing very well in striking that balance.
Indeed, thank you.
Now we are going to the last 3 questions. So, given that a significant number of SACCOs in Kenya do not meet the minimum 100 million Kenya shillings threshold for regulation by SASRA, and therefore they are unregulated, how does SASRA plan to address the challenges of mismanagement and financial instability in these smaller SACCOs to protect members' savings and also promote long-term sustainability?
Very good question. That dovetails very well with your earlier question about the innovation.
Yeah.
Because for us, remember we talked about cooperation among SACCOs.
Yes.
Now, one of the we believe as a regulator that it is possible to regulate all SACCOs from day one.
From day one.
From day one.
Okay.
You register, day one, you are regulated. You just need a lighter version of regulation. And that means to be able to do that, because of the number of SACCOs, we don't know how many are. I know you 4,000, 6,000, we don't know.
Sure.
But to be able to do that, you need a technology platform. Where this SACCO, doesn't matter where it is in this country. From day one, they recruit one member, they can update their data. They can update their financials. We just need to have line of sight of their data.
Yeah.
And only engage them as need arises. So one is to use technology infrastructure such that SACCO doesn't have to wait to raise 10 million to buy a system.
Sure.
They can simply plug into that. Just buy their desktop and plug it. And we are even looking at a situation where the SACCO may not have an accountant because they may not afford to buy one in day one. That service can actually be provided in a pooled,
or like the shared services platform.
That is what Cusco used to do in central bookkeeping.
Yeah.
We just need to acknowledge that the central bookkeeping was based on the analog age.
Yeah.
We come to the digital age.
Yeah.
It is happening here. There are accountants here who provide services to people in UK.
Oh, yeah, sure.
Taxing services because of technology. So we just need to be innovative, and that's what we are encouraging. That's why we are coming with a law to enable innovators to invest in such platforms. And for us, they tell you we are providing, for example, this in the Western region. All the SACCOs will use that, and it is licensed by us, and we tell them there is a provider of that service in that area. You invest in this, or you plug into that. It will make it easier for them to plug in. And they get support because they can be trained, and it's already happening here, right here, for pension space. Today, we have over 1,000 pension schemes, but most pension schemes, including ours and possibly, many institutions, they plug into an administrator's platform. A regulated entity providing those services. We call them administrators.
Yeah.
In our space, we are just simply shared platform, and it works. And we think that's an innovative idea that will now enable us. You don't even a single shilling. You are registered. You want to start collecting money, start right.
Yeah.
And that way, the standards, now you create regulations that are, flexible enough at that level. As they grow up, now you can now tighten. So we believe it is possible. But I would say that it is perhaps not correct to say SACCOs are not regulated. There is a whole law called Cooperative Societies Act that is currently under debate in Parliament, being amended, Cooperative Bill 2024. Should be out possibly before the end of the year. And it does regulate all SACCOs outside SACCO Societies purview.
Okay.
So there's somebody taking care of them in their smallness. But if you want to bring all SACCOs under what we call prudential supervision, and they enjoy all the benefits of the other other elements you're talking about within the regulated space, including deposit insurance, then that is the vision we have, that it is possible if you invest in technology and enable what you call pooling of services. And indeed, again, speaking to the innovative approach, we have again, like the non-deposit taking SACCOs we are regulating. We provided in the regulations that they can actually, outsource internal audit services. They don't need to employ their own.
Yeah.
And right now we are issuing guidelines to working with the ISPAC to make sure that who can provide internal audit services. And that we are saying you can be an auditor, you provide those services to 50 SACCOs. And we are working on the framework. So I mean there are means and ways of addressing these things. Nobody should be left outside because of your size.
Sure.
Yeah.
Oh, thank you for that. How does SASRA see the role of public-private partnerships in driving financial sector development? And what opportunities exist for collaboration between SASRA and SACCOs to achieve shared objectives?
Well, now, when you speak about financial sector development, in Kenya, we have MTP4, Medium-Term Plan 4, which is Financial Service Sector Plan. That is, the piece that implements the Vision 2030 and the financial sector. And under that, we are looking at two dimensions in terms of development. There is stability, financial inclusion, and the question of efficiency. I think stability is and you check all these are interconnected.
Yeah.
Okay? If you have efficient way of regulating or offering financial services, then more people will, it will be more cost efficient, more people will actually access those services. And as a regulator, then it will be even easier for us to regulate those institutions, so they are interconnected, and therefore there is a huge space. And again, going back to what I've just said, when we have a law around the SACCO shared services framework, we are one of our biggest motivation, because as we speak today, SACCOs can actually share so many things, including audit services. They can, internal audit. I think what you are trying to do is to have a regulatory framework where the issues of data protection, the governance framework, the risk is actually defined, so that if you are to offer this, and that means the people who will play in that space are actually private investors. It is the innovators.
Yeah.
It is them who will step in that space. If they partner with 10, 20, 40 SACCOs, the SACCO cannot wake up today and say, no, I don't like your services today, I pull out. No, we will not allow you to do that. You have to give us a notice, or give that innovator a notice, so that there is time, and make sure that you are not jumping from one innovator or provider of services to even a worse one. So we regulate. Again, that will also bring what you call standardization, because one of the things fintechs and innovators tell us, SACCOs, you go to this SACCO, they'll tell you we are unique. So we want ours this way. So we are asking ourselves, what is unique about giving a loan? What is unique about onboarding a member? What is unique about processing a deposit payment?
Nothing.
But because I'm a teacher, I'm a farmer-based, I am community-based, I am unique. That gives problems to innovation. Innovation assumes a certain standard operating ways. The differences are very minor, and that's what defines maturity of an industry. So we are looking to that, because that will allow private investors to actually invest in that space. And I'm not sure the public-private is also a space we are seeing, because we can actually start partnering with private sectors. For example, from where we sit, the SACCO industry, as we speak, I would not say it has, when you compare with the other industries in the financial sector space, they have more or less matured because of the journey, and they are standardized across the world. SACCOs, the practices of SACCOs in Kenya will perhaps differ a little from South Africa, from Rwanda.
Yes.
And that means each jurisdiction has to take its own path. Now that means there is a room for collaboration between the players who are private and ourselves as a regulator.
Yeah.
For example, today, what would be the standard curriculum for a person working in a SACCO? That person has his BCom in whichever area.
Yeah.
In a banking, there is a professional exam they can do.
Yes.
In insurance, there is a professional exam they can do. In pension space, there is a trustee development program RBA has. What is it for the SACCO industry? That space that we can partner, and we make sure we develop.
Yeah.
And that means there can be the room. I think it's limited to our own innovation.
Yeah.
Otherwise, for us, government is always happy to be told this is what we want as a players. And this how it can be done. I look forward to that opportunity because we do a lot of heavy lifting as government, but the ability to implement is limited because of the resource. But when the private sector realizes this opportunity, the most successful SACCO jurisdiction in the world, especially North America, Australia, South America, even Europe, government role is very, very limited.
The private
is the industry that drives. Where that happens, and it even applies here in Kenya. The industries that are most progressive, it's not that government is innovative. We are not innovative. It is the private sector that says this is the direction we want to go, and this is where we want your support as government, including this is the bill we want, consider it. That's what happens through lobbying and the like. But you wait for government, Serikali's idea, a lot of priorities change and industry can suffer. So that space for me is the biggest, where private innovation is actually encouraged to drive the industry. And I think is an area in our current strategic plan, we are looking at, greater, like I said, greater collaboration between the SACCOs and greater collaboration between the SACCOs once they are organized, better coordination with the government. The sky will be the limit.
Absolutely. There seems to be a lot of opportunity and room for growth. Finally, as we conclude, what is your vision for SACCO regulation in Kenya, and how do you see SASRA contributing to the overall development of the financial sector?
Again, to the word overall development of financial sector, I think from MTP4, Financial Services Sector Plan, SACCOs, like I said, we have had what I call institutional individualistic approach. Each institution is trying their own way. So our vision is to see greater coordination, greater cooperation for deeper and more meaningful, outcomes. Okay.
Yes.
That means if it's something like DGF, I will compare it with what we call the Kenya Deposit Insurance Corporation. It is funded by the industry. They also contribute and fund their regulation, directly or indirectly. We want the SACCOs to actually agree that we need to ensure our own survival. We need to come to that space. So then the issue of SACCO shared services. What does this do? For us, SACCO shared services has a lot of elements. Payment, access to market, what we call financial market infrastructure, whether it's a deposit guarantee fund, payment infrastructure, credit information sharing, what we call credit guarantee, or we call them, we all call all those market infrastructure for the financial sector. SACCOs today are playing the periphery, or through very inefficient structures. If they came together, it is actually these providers of these services that have been knocking at their door. So for me, looking at the next 10 years, these are things we need to give priority, because together we are stronger. You can run very fast alone, but to go far, we need to cooperate. And I think that's the biggest test, because that opens a whole world of opportunities. And I keep saying this because development partners are always looking for bankable projects, but they want an organized market. They don't want to knock from one SACCO to 100. They want already unorganized. That's why I talk about cooperation through whatever form. Then you'll actually be dealing with one entity, and you have dealt with 100 SACCOs. So for me, is great that vision of deeper and more meaningful cooperation between SACCOs is a must if you are to realize these visions we are talking about. Why do I say that? Today, you'll hear conversation that, no, me, I'm strong as a SACCO. I have no risk of failure. Who tells you? Royal Bank of Scotland, where the Queen was banking, came crumbling after 100 years. So the large SACCOs especially, instead of expanding and going for cutthroat competition, should actually be looking, how do we cooperate to make the industry better? Because that makes work of everybody easier. Today, there is very unhealthy competition that at times we wonder, where is this heading? Because you can't raise adequate capital. You're not like a bank which can go to the market and invite an investor who's deep-pocketed. For us, we rely on members. If there is a challenge in the economy, the risk can be very huge. But when you have built an ecosystem that is resilient, then we shall all survive.
Absolutely. Thank you so much, Mr. Peter. It was such an honor and a great time we've had. Thank you for sharing your insights. Personally, I've learned a lot, and I've learned that there's a lot of opportunity for SACCOs out there and their members, and also embracing that aspect of cooperation among cooperatives, and then we will go far. The sky will be the limit. Thank you so much for having us, and we look forward to having you again and again, because I'm sure things keep changing in the industry, and of course we'll always need an update here and there, and we are really grateful.
Thank you.
Thank you so much for keeping tuned to this point. Until next time, my name is Irene Kirianki, and today we were with Mr. Peter Njuguna from SASRA. Thank you so much, Mr. Peter.
Thank you. Most welcome.